Welcome everyone. Today's video is the next installment of advanced trading strategies, and today's trading strategy is called stink bids. So I'll break this down for you. So stink bids is a slang term for basically limit orders that are so far below the current market price that they are very unlikely to ever be hit. But in the case that they are, traders can make a lot of money very quickly. Now I'll show you an example of a liquidation cascade that happened on the Kraken exchange in the 22nd of February of 2021. So basically what happened here is that, from my understanding, some whale basically liquidated their life savings in Kraken, and they didn't do it in a clever way. They didn't sell off chunks of it into the market so the order books could absorb all of the selling pressure. No, they sold all of it all at once. And basically what happened is that that caused a liquidation cascade on Kraken. And as we see here, we have Cardano up on the screen. The price of Cardano massively dipped. So if I just show you here, it went down about 85%. And this was purely on Kraken, right? This didn't happen on any other exchange. It was abnormal market behavior. And as you can see here, if the wick is present, it means that trading actually happened at that place. So a lot of people think these are fake wicks. Like, no, there was genuine buying and selling, at least at this point here. There might not have been at some of these other points, but as long as it gets down to the bottom here, there was actual buying and selling of Cardano at 15 cents when it had originally been $1 like minutes earlier. But you had some people out there who would have had stink bids in the order books. And say if you had a limit order for like 16 cents on Cardano on Kraken, when it went back up, you made like 580% profit, roughly, depending on where you had your limit order. And so, as you can see, this is an extremely profitable way to start trading, even if you have a little amount of money. Right, I'm going to show you another example. So this happened for the Matic perpetual future on DYDX. So as you can see here, there's a massive downwards wick, and that was like a 92%, 95% drop, right? So even if you had a limit order at like say 10 cents, that's 629% gain. We'll take a look at Ethereum chart. So this was also on Kraken on the same day. So basically when that whale sold, it caused everyone who's margin trading on Kraken to basically just get liquidated, right? That guy really just wiped out a ton of people. And it not only affected ADA, it affected ETH, BTC, Bitcoin Cash, Ripple, basically everything that is margin tradable on Kraken. So we had like a 60% dip here as well. If you had bids at the bottom, you would have made a lot of money too. We'll take another example here. So this is Binance US for Bitcoin. So this is like their most liquid pair on Binance US, and still it got hammered. Let's just take a look here. So it went from $62,000 all the way down to $8,000, and people who bought there would have made a ton of money. And these are legit trades, like I said before, right? So if you bought down here, you've actually bought down there. The exchange isn't going to take that money away from you. Like, you've done well there. And here's another example, but this is on Bitstamp, but it goes the opposite way. So instead of having limit buy orders way below the current market price, we have limit sell orders that will basically put in shorts when the price goes to, like, when it spikes up like this, right? So if we take a look here, this is Cardano on Bitstamp. This is the actual movement of Cardano that day, and this was on Bybit. So it did have the wick down, but it didn't have the wick up. So you could take advantage of this on the upside. So this will happen on occasion, but you'll mainly see liquidation cascades, which cause the prices of these crypto assets to go down, as people are usually highly leveraged long in crypto, not leveraged short. So you'll mainly see prices going downwards. So if you wanted to do this, for example, on DYDX, I can just show you quickly how it's done. Let's just imagine we had a limit buy order in for Matic on the perpetual futures pair at like 0.1. So we go to DYDX, change to Matic, and we'll go to limit buy order. Let's do like $200 and then put the limit price at 0.1. So I'm not logged in currently, but this is exactly how it would go, right? And then you just press long here, and that would put the limit order into the order book. And then all you'd have to do then is just wait until that order was hit. So if that order hit, a mere $200 would have turned into like approximately $1,300. So this really shows that you don't need a lot of money to start doing this strategy. So I showed you there where you put a limit buy order in for Matic at 10 cents, but as you can see here, it proceeded to drop like approximately another 40-45% from there. Now, if you were highly leveraged at the time and you had many other positions open, this might have put you at risk of liquidation yourself. And that would have been devastating because you would have got liquidated all the way down here and then the price shot all the way back up again. And so that would hurt a lot to see if that happens to you. So what is the best place to start doing stink bids? Well, I've shown you a couple of examples here. So Kraken seems to be a good place. Binance US used to be a good place, but I don't know if you want to go there right now due to the regulatory trouble that they're getting into. DYDX, of course, this hasn't only happened on Matic, it's happened on other places on DYDX, but yeah, this is a good exchange. And then Bitstamp too, because this is one of the more lower liquidity exchanges. If you just want to take a look for yourself, you can go into CoinGecko, click onto Ethereum, Markets, Spot, and then what we want to do here is press the -2% depth. And the -2% depth basically tells you how much money it takes to push the price of Ethereum down by 2%. The more money it takes, the less likely that you actually want to trade on that exchange, because you're not going to be able to get these massive downwards dips in price. On Matic, DYDX, for example, it probably didn't take that much money to send the price of Matic perpetual futures down 95%. Probably only a couple million. And this was probably just a fat finger mistake by some like large whale. Whereas on like Bitfinex, for example, it'd take $22 million. Binance, $13 million. Woo, $9 million. So yeah, as we can see here, Kraken, different Kraken pair. Bitstamp is down here, ETH/USD, of course. Coinbase on the ETH Euro pair. So don't limit yourself to only like the USD pairs, as the more sort of exotic pairs usually have worse -2% depths as well. You can also just use the volume here as well. So that's it. I hope you enjoyed, and make sure to subscribe for more videos like this one.